Hello everyone, my name is Denis, and in this stream I will try to explain to you about Micron technology, and probably after the stream you will want to buy it, or maybe no. First of all, you can see a really nice growth here from maybe $100 to $500, and from my point of view I think that it can be a little bit higher because they are making HBM memory, and it is a special memory that you place near the GPU, and actually you can train LLM or other AI stuff, and actually Micron by themselves pushed information about their orders for the next 3 years, and you can see it here. Revenue $108 billion expected, and it will be $63 billion in net margin, and it will be 58%. I think it is absolutely awesome. Here you can see how they started to grow, and previously they were on a like 20% level. Now it will be 58, then in 2027 64, in 2028 57%, and you can see that in 3 years they will generate over $270 billion, and now we have a market capitalization over 560, and the thing about the stock that we don't know what will be in 2029 and 2030, because right now a lot of companies, especially from China, they are actually trying to make the same things, and in some places we can find that this new HBM memory, I think, or not I think, some analysts think that there will be no shortage after 2027, and probably this 57% margin unreachable, but anyway, in the next years, here I have a model that they will fall down a little bit by revenue to 125 from 172 in 2028, but I think that these 4 dots are not really accurate, and it can be a little bit different, because it is unreal to plan for 3 years after. And I need a moment. If everything will be okay with the margin after 3 years, or maybe everything will be okay even in 2028, here you can see some numbers, but I think they are just not normal, like 2,500 by price to sales. I think it is a little bit high. From the other side, if they will grow somewhere here, it is 200%, and it is awesome. Actually, you can research about the memory, and if you like it, you can push the like button. And also, as always on the streams, if you have any questions, please leave a comment in the comment section down below. And probably I will just make my regular research, just some stocks. I need a moment to find tickers for them. And in this stream I will talk about Constellation Energy, Starbucks, Altria, Accenture, Intuit, Vertex, Equinox, Train Technologies, Medtronic, Southern Company, CME Group, MC Kissing, don't know that stock, CVS Health, Adobe, Duke Energy, Comcast, Marriott International, Home Aerospace, and HCC Healthcare. And we'll start from CEG, Constellation Energy. I think it is a utility independent power producers, and it looks really interesting because we have some probably good things in energy. Maybe it is okay. We have average price to sales 2.3 and negative numbers in gross profit and net income. Not really good because they had problems in 2021 and 2022. Now it is a little bit better, but I think it is quite hard to invest in something like this because they dropped down from profitability to negative margin. I think it is better just to pass it. Not interesting, but maybe we will find something interesting about them on Go Focus, maybe high amount of margin or something like this. CEG. And we can see 10% future revenue growth rate, $30 billion, 32. A little bit high amount of debt, and from my point of view it is not really interesting company, because in theory you can buy something like this for like 10 price to earning. Now it is 40, and probably you will never see something like this in my portfolio. Next we have Starbucks, surely very old and very boring company. 3.5 price to sales, 19 gross profit, and 49 price to earnings. And only a 5% growth rate for the last year. Definitely it is not normal valuation. I think like 30. Yes, 30, it is a little bit better. And now you can see that they are actually falling like a rock by price to earnings. You can see very high amount of dividend payout ratio over 200%, and now we have 5% net margin. Absolutely not interesting, and they have to recover, and after this recovery you will have like 18% upside. Not for me, definitely. It is strange. We have stream also for phones. Next one, Altria MO. 4.2, 6.16 and 13.4 by price to units, and you can see that actually that they are growing really slow. In this year it is 0%, and definitely they are overvalued, but margin extremely awesome, like 54% in 2024. Now they're just making money and paying you 6% dividend, but without any growth. It is sad, and I think it is quite hard to make some money here. Maybe if they will cost super cheap, like $40, but now it is definitely not interesting. Now we have Accenture, and from my point of view they can be disrupted by AI, because actually they're just making a specific soft. Now you can make specific soft by yourself, and actually I researched this company here, and I decided to not participate in it. Now they're still growing, but I don't know, maybe they will start losing their revenue and net income. It not looks like that they will lose it like in the next quarter, but people are afraid a little bit. If they will recover to previous valuations, it is definitely a buy, 140% upside, but I just don't believe in it. Not for me. 178. Like 10% margin, probably some grow, or maybe no. I just avoid something like this, and actually it was a really good idea not to buy, because now you can see like minus 27%. Next one, Into, and I bought Into. My buy price is 4.4, plus you can see some put options, and actually I think it is awesome time to buy. First of all, we can see that definitely something happening in this niche, but I have my numbers like 11, 14 and 50. I don't think that they will come back faster to these valuations, but if we will check all analysts, it is like median price by analyst 600, from 600 from 400 to 600. It is a plus 50%, and I think that it can be a really fast pushback to 600, and in this situation we will see what actually happening in this stock by revenue and net income, and I will think about should I sell it on 600 or should I stay. Probably I will stay in this stock because I think it is not possible to disrupt them with agents because in theory agents actually don't give you any edge. It is like a average person and I think you can't do what Intuit do with their soft with like person. It is like to dig with a shovel, not with a horse, not with a tractor. It is just a waste of time, and I think these bots will just add it to Intuit soft. And this is how you actually do your stuff with bookkeeping or accounting. I'm holding, but it is not a financial advice. You actually need to do your own research, but I think everything will be okay with the stock. And now we have like price earning 25. Not really a huge number. If we will check it on Into or on Guru Focus, you can see a 12% growth rate and a little bit better numbers will be in net margin. It is 20. 50 price earnings a little bit high, but 25 absolutely okay. I think 35 will be in the future easily. Next one, it is Vertex Pharmaceuticals, and actually I really like Vertex. They are so awesome, and I hope you will see here some pattern. I don't remember numbers, like 10, 30 I think. Yeah. And actually they are just growing with revenue, margin quite stable. You can see like 30 and previously it was 30. And here you can see some peaks from like 2025 revenue $12 billion, and it is $12 billion. Absolutely accurate, awesome company. I think I can delete it right now. And you're just buying it with a discount somewhere here, and then grow with this company like here. And actually you can sell it when they are overpriced or just on a regular price. It is plus 60 in like 7 months. It is awesome. Or probably you can sit a little bit longer. Now they are on a fair value. Maybe it was a good idea to buy it here, but I missed this opportunity. I will write down the stock to my list with 375 mark, and if Vertex will reach 375, I will research it deeply, and I will hope that everything will be okay like previous 10 years. Awesome company. VRTX. 375. And actually, I have this list, and you can see some tickers. Here you can see difference, and actually some stocks super close to research, ABT, and probably we will see some other companies, MA. Next one, it is Equinix. Equinix, it is a REIT. E E Q I X. Equinix. And I think it is quite hard to buy it on the highs. 14% margin. Previously it was like 10. And platform that interconnect the foundational infrastructures. It operates through the following geographical segments: America, Europe, Middle East, and Africa, Asia Pacific. It offers digital services, data center services, interconnection services. Definitely it is interesting. Maybe that is why they're growing so fast. But we have price training 100. From my point of view, it is not normal number, and it is not a bug, because in 2019 it was 97, then 170 in 2020. Extremely high valuation. I think in theory, if you believe in this, you can buy it here, but it is quite hard for them to like lose 42% valuation in these days. Next one. Train Technologies Industrial, Building Products and Equipment, TT. Average price to sales 3.2, 9.7 gross profit, and 30 in price to earning. Actually, for the last like 5-6 years, it is absolutely normal valuation, and you can see that they have some good things in margin. They are growing from 10% net income to like 14% net income. It is definitely awesome. They are growing, and I don't actually know anything about them. But if I will see something like 280, I will research them. I will just write them down. 280, and definitely it is something like this what I'm looking for. Growing revenue, growing net margin, and you just need to buy it on some sort of a discount. MDT, Medtronic, awesome. Med company. But they maybe had some problems previously in 2021. I think it is just COVID problems. Now they're growing, and actually we are super close to this buy zone. Medtronic. Maybe we can just adjust this buy zone a little bit higher, and previously it was a really nice buy opportunity here. You can just buy it here, hold it a little bit, and generate like 30% quite fast. It is interesting. MDT. I will write like 85, and just not to forget to research the stock. It will be with a negative difference, because I think you can buy it right here, and also we can check it on Guru Focus. Maybe just analyst can predict that they will fall down by revenue. Maybe the main problem that it is a little bit slow company, 6% in the future revenue growth, and you can see that 3 years revenue growth rate like previous growth rate 3.5%. Not good. And 20% like net debt. And worst thing that I can see here, you can see like 2015, stockholders equity $53 billion, and it is 50, 51, 52, 48. Actually, if you like equity, you just losing it, and it is not really awesome. They are growing, but not really fast. I will dig a little bit deeper about them, but on the first look they are just really slow, and all you can like take here it is buy like for 80 and sell it on 100 ideally. Is it worth your time? Like 25%? Yeah, it is possible, but if you have into it right now, why do you need this stock? Definitely it is a little bit strange from my point of view, but if you will research and understand it, it is absolutely okay. If I will have some time in the end of the stream, after all stocks, maybe we will just check the presentation, something like this. Now we have a Southern company. It is a utilities regulated electric. Everything related to electric is on a highs. Price to sales 3, price to earning 22, and we are just a little bit higher than fair price. Nothing to do here, because I actually need discount to buy something. Southern company, 10% growth rate, it is good, and SO 5% growth rate here by analyst, and not really awesome. You will just grow with these numbers. Guru Focus value 91, 92, and in 1 year it will be 95. It is absolutely not interesting. It is super slow, like 3% per year. CME Group. They started to pay close to 100% for the dividends. Maybe they just don't know how to spend their money. It is not a good sign for all businesses. They stuck to their valuations from 2022, or maybe a little bit earlier. 14 price to sales, 27 price to earnings, so they just printing money from my point of view, and these stocks you can buy them from time to time, but it is quite hard to get 30% discount like here in 2020. I think you can just wait for like 15% discount like here, and it will be from fair price like 230, but if we will see something like this, probably you will have a better stocks to buy, because in some stocks it will be like plus 50% from lows. It is big company, and it just wouldn't grow super fast. That is why I think I will just probably will never buy. I will add it because it is awesome company, but I don't think that I will buy it in a real world. Like 240. Hard to buy stock. Next one, it is MC Kisson Corp. I don't know what it is. It is a medical distribution. MCK. MCK. Valuation quite good. Price to sales 0.19, gross profit 4.6, net income close to 20. And now it is super overvalued to previous valuations. I don't really need a company with net margin lower than 1%. Just pass the stock and don't think about them. Really a hard business. Now we have quite the same stock, CVS Health with ticker SCVS, with price to earning average 27, and they have some problems right now, like 0.4 in net margin. Just don't think about them. Adobe or something like this. I think it can be interesting because now we have a lot of AI stuff to actually generate images, but in reality they trained on like not the stuff, and Adobe they are working differently. They train their models on their stuff, and in theory big companies will just pay Adobe money to actually use their software, and everything will be okay. Maybe they will lose some small companies or small people who actually buy their stuff, but now we don't see it, and probably it will be something like with the Intuit, but here you can see 200% upside. I think if we will open Guru Focus, they will predict the same growth for like 10% per year and the same margin, and it will be interesting because I actually open it right now. AGBE. They are predicting 8% growth, but with 12% growth rate by EPS. I think it will be close to previous numbers. And actually it is price to earning 10 by forward. it can be really cheap right now, but I'm not buying. I just don't believe in it. Plus, I have the same bet on Intuit, and if everything will be okay with Intuit, the same will be with Adobe. Probably you will make more money in Adobe, but I would like to sleep well. That is why I'm buying Intuit. But from numbers, it is like everything is okay. And actually revenue and net income not falling. I think that they will recover, like something like this. Maybe a little bit lower, like this. And maybe in the future we will, oh, maybe. Something like this. And it is years. And like plus 200% in 2 years. Definitely it looks really good, and if you're scared a little bit like me, like a chicken, you can see some channel here. Maybe you will just sell the stock here and it will be like plus 110%. For me it is absolutely okay. I just do it in Intuit. Next one, Duke Energy. 2.85, 9.8, and 27 average by price to earnings. Not really accurate, maybe 20 is a little, yeah, 20 definitely better, and as you can see, average valuations and stock price quite close. They're super sticky, and you can see that actually this buy zone not working in the stock because it is just one hit in 2020. Probably you can buy Duke Energy with a little bit lower discount, like 20%. I will add it to my watch list on 100 mark. Duke CMS Camcast, and I researched it already. I think it is a dead stock on a long run because now everybody adding this satellite internet and Comcast not really growing. They sold the Hulu service. It is a dividend machine, but it is definitely not growing and probably will not. That is why they will just lose their value in a matter of years and will just die somewhere. If we will check numbers like debt, you can see that debt, clean debt, over than $85 billion. The valuation 98. You actually don't own anything. Banks own everything, and they're paying like $1.2 billion in stock compensation. I really don't want to hold something like this. It is absolutely insane for me. Even with some discounts, it is not a good idea to hold something like this. 3.1, 18, and 30. You can see that this stock actually going with earnings, and it is awesome because we can predict them, and Marriott overvalued right now. I really don't like hotels because again in Marriott you don't actually own anything. In air. It is a little bit easier here, 5% growth rate, not interesting, net margin 10, and actually with 5% growth rate and 10% margin, you can see that you will grow really slowly. I actually don't need like 5% growth rate from my portfolio, that is why I'm just passing it, and you can see at that $17 billion. 17, it is not good. And as I said, total stockholders equity in 2017 it was $3.5 billion. Now we have a negative 3.7. No, not my style to invest. Like Home Aerospace, HWM. Aerospace and defense, they're growing really fast. I think it will be really hard to buy them right now. And now you can see 64 by price to earnings. Maybe analysts will tell us something like they will have like super fast growth, like 20% or something like this. No, it is just 12. I think it is not possible for them to make a mass production or something like this. Net margin 18, and it will grow a little bit, but this valuation, I think they will fall down right after the iron and other wars will end. Not interesting. Super expensive, I think. If this stock will fall down for like 50%, it will be high valuation and not for me. And the last one, HCA, healthcare. We have a really nice drawdown here. It is awesome. You can see like minus 24% and 1.19, 7.84, 13.7, and we have some screenshots here. It signs that it is actually previously it was in my buy list. It is written here that from 87 it will reach 300 with 20% CAGR, everything by the strategy. And actually 87, I think it is somewhere here, yeah, and 300. Yeah, it is again everything is working perfectly, and from time to time you can buy the stock. It was super easy to do here and here, and I think it is some sort of a super stable company. Yeah, they are growing with a stable like 10% margin. Awesome. I will add it, but with like 340 mark. HCA. 340. think I'm making it for 44 minutes. We have no comments for watches for 2 minutes. It is definitely better than the previous video. I hope I will stream more in the future, and maybe I will add some guests. But for this day, I think I will shut it down. If you have any questions, definitely write down them in the comment section. Thank you for watching. Bye bye. And think about Micron. It is definitely interesting.